Hello guys, welcome to this new lecture about financial loans in Odoo. So guys, financial loans, or we can call it corporate debt, are funds borrowed by a company from banks or financial institutions to fund expansions or secure liquidity, which must be repaid over a specific period with interest. So guys, in Odoo, these are recorded as long-term or short-term liabilities in the balance sheet. The system allows you to track the loan principal, schedule repayments, and automatically isolate bank interest expenses to ensure flawless financial reporting. So guys, imagine your company acquires a new commercial vehicle or production machinery worth 100k, financed through a bank loan to be repaid over 5 years with an annual interest rate. In Odoo, you do not record the 100k as an immediate direct expense. Instead, you set up a liability account in the lending bank's name every time you pay a monthly installment. Odoo splits the payments. It reduces the loan principal, the 100k debt, and routes the interest portion to a dedicated interest expense account, keeping your balance sheet perfectly accurate. And guys, when we add a loan, we choose the amount and the duration. After that, Odoo automatically will create and confirm the interest of the loan in the right time every month. So guys, to explain more, go to accounting and choose the loan and click in new. Here accounting and loans, click in new to create a new loan. For example, I will name it machine loan, and the amount 10 million, and here the loan date, the 1st of January, the duration 12 months. Asset group, if you want to add asset group, we will leave it empty and click here in save. After that, click in loan setting here, choose the long-term account for the loans with the duration more than 1 year. We will choose this account, borrowing from credit institutions. And here in the short account loan, we will choose this account, current bank loans. We will use this account for the short-term accounts. And here in expense account, we'll choose this account, interest expenses. And in the journal, we will create a new journal. Click here in new, and name it loans. And here in type miscellaneous, click in save. And here guys, this skip enter option is used when you migrate an existing loan into Odoo. From for example, you have a loan from 1 year or 2 or 3 years ago in the old system, and now you will immigrate to Odoo. You will ignore past installments that you have already paid and accounted for manually, preventing the system from creating duplicate accounting interest. I will explain with a simple scenario. Imagine you took out a loan on the 1st January 2024, and you have already manually recorded the payment for January, February, and March in your older accounting record. Now in April, you want to start tracking this loan inside Odoo. Without skip until, Odoo will try to generate accounting interest for January, February, and March all over again, ruining your past financial reports. But with the skip until, you set the date to the end of March, and the result here, Odoo will completely skip and ignore any amortization lines up to that date. It will only start generating automated journals entries for the upcoming installments from April 2024 onwards. So let him empty, and click guys here in compute. We have here the loan amount here, and it starts in the 1st January of this year, and in the payment shows the end of the month. Because if you choose at anniversary, Odoo will split the amount of the loan between only 11 months, but we want it 12 months, so choose end of the month also. And also in interest rate for the bank shows, for example, 12%. And here 1 year, here the 10 millions. Finally, in compounding method, we will learn how the system calculates in every single way. We have here 8 ways. We will explain the first one. So we have the first one, the European method here. This method applies strict mathematical rules blindly in the system, without looking at the loan's maturity date or the actual nature of the month. For the 31 days months, any month that actually ends on the 31s, such as January, March, Mayo, etc., is mathematically truncated and treated as exactly 30 days, not 31 days. And for February, in this method, the system legally and computationally treats the end of February, whether it is 28 or 29 days, as if it were the 30 days of the month. So guys, the result in order, if you select this method, 30 divided 316, you will notice that the payment amount for February matches exactly with January or April. This is because the system guarantees February 13 fictitious days to keep the installments and the interest payment perfectly equal and stable throughout the entire year. Now we will see how we calculate with this method here in the table. You can see this table. So guys, in the first year we have the 10 million amount here, and to calculate the interest in this method, we will get the 10 millions multiply 12% multiply 13 divided 36, like that guys. I can write here 10 millions multiply like this other 10 millions multiply 12% the interest rate multiply 13 divided 36 and close the first one and like this. So what we will do, we will get the 30 divided 36 and the number and the amount we will have multiply in 12% and multiply in 10 millions, and the amount we will find it, we will multiply it also in 10 millions, and that's how we found the interest of the first year. And we have a technical notice guys here in Odoo. The interest is exactly this amount, because here guys Odoo financial engine calculate the very first period from the exact activation date. From the exact activation date, January, the first day in January is day 0, counting exactly 29 interest days for this initial cycle to align the payment processing architectures. So guys, here it's 29 not 23, it's 29 not 30, and you will find this correct interest. And here guys in the payment, and guys for the principal amount, how you get this amount. The bank guys get every month payment from us, and it's a stable and it's a fixed payment, this payment. And when we get this payment minus this interest, we will find this principal amount. And for the balance, guys, how we will get this amount? It's 10 millions minus this principal amount. We find this amount. And guys, for the second period here of February, the starting balance is 9 million and change here. The interest is 85k and 943 Algerian dinars. How we will calculate the balance here in the second year? We will get this amount, and the balance of the first year is minus the principal amount of the second year. We get the balance of the second years, and we continue. And for the interest of the second year, we calculate it by multiplying the remaining balance by the adjusted period rate factor for February. Even though February physically has 28 days, Odoo applies a calendar smoothing adjustment factor to maintain baseline parameters. And for the third row, guys, the principal amount is this amount, the balance amount minus this amount. We'll find the principal amount. And the fourth line, guys, the interest will calculate it like this. We will get this amount of the third year's balance, multiply 1%, we will find this amount. Also, guys, in the 5 row here, we'll get this amount, multiply 1%, we'll find this amount. And continue like this in all of the interest amounts. Because the interest is 1% from the balance in all the other years here. And here, guys, in the last row here, in the end of the year, the final settlement, the closing entry. The starting balance is 875,000 here, and the interest will calculate it like this. This amount multiply 1%, we'll find this amount, and the total payment is this amount. And we have here the ending balance 0 Algerian dinars. And click in apply, guys. Now click in confirm. Automatically Odoo, guys, will create the posted entries. If you click here, we can see them 12 because we have a 12 month, and the posted entries it's to now Mayo. And that's it, guys. And that's it, guys. See you in the next lecture. Your trainer, Musa.